Got Fritz Folts joining us, Chief Investment Strategist at 3 Edge Asset Management. Fritz, good to have you back on the show. More record highs in gold, a record settlement, and still rewarding the long-term bulls. It's up almost 5% since the last time you were on the show. That was just 5-6 weeks ago.
That's nice when you talk about something and it actually goes up, so we'll take it. So just to level set, so here at 3 Edge, we're multi-asset investors, right? So we're not exclusively gold investors. We look across stocks, bonds, real assets, which would include gold. And so we like gold for 2 reasons. One, it's an excellent shock absorber in a multi-asset portfolio, right? If you have issues in the world, geopolitical tensions, oftentimes your risk assets will suffer, but people will flee to gold as a safe haven. So we like it for that. And then other times there's just periods of time where you want to own more gold in your portfolio. And the way we look at it that way is it's almost the opposite of paper money. It's the anti-paper money. You can't print more gold. You own it. And what changes is how much paper money it takes to buy that gold. A couple factors that are driving gold right now, clearly, geopolitical tensions are high. They're elevated. Everyone's waiting to see what Iran is going to do in the Middle East. And we see Ukraine and Russia. That is also heating up. And the other is clearly, it's almost a certainty now that the Fed's going to cut rates and lower interest rates. Both of those factors will continue to support gold in here, we believe.
Okay, but you also in your notes comment on how, as I just pointed to, Fritz, you've got gold, which continues to benefit from positive investor psychology, momentum, and trend following. The chart's basically bottom left, top right.
Absolutely. And you are my chart guy, Ben. I love the charts. No, seriously, they're really good. So absolutely true. One of the things that our model research is telling us is that there's a lot of positive investor psychology. There's momentum. There's trend. It's like, well, you're looking at the S&P or the NASDAQ. You're getting that same kind of investor behavior pushing gold prices higher. Now, the warning on that, though, is you may also have that unwind on you. So it was interesting last Monday, right, when we saw that market correction based on the yen carry trade. Well, we also saw some selling in gold because people were getting margin calls. They had to sell what they could, and so they sold some gold. But the momentum and the trend following is absolutely there, pushing gold higher.
Yeah, which is why I think it's important to be very time frame specific when you're talking about trend, right? Because we could see a reversal on the short term, but that longer term bottom left, again, top right, still intact. Let's talk about, so you like gold, and oftentimes used as kind of a diversification, right, tool when we see stocks lower to sort of deleverage a little bit, find that safe haven asset. But oftentimes, or as we've seen recently, stocks and gold can go higher at the same time. You like stocks as well here, Fritz?
So I would say where we are with the stock market right now is we're at about the midpoint of our allocation. So we're not at our minimum, we're not at our maximum. I mean, we look at the S&P, we look at the NASDAQ as being significantly overvalued, obviously. However, it certainly hasn't stopped the market from going higher. So our feeling is, listen, you can't, hide under your desk and be completely out of the equity markets here, but it's probably not a time where you want to be at your maximum either. So we're kind of split it right down the middle. So we want to hold some equities along with the gold.
I like that. You want to participate, it sounds like, but not necessarily get caught out over your skis. Let's talk a little bit about bonds. You mentioned that being that third area of allocation. Where do you see things going there?
So, it's interesting because we've taken on a little bit more duration recently, but we've chosen to do that with tips. The Fed really wants to bring real interest rates down. I believe, they're very concerned about whether the economy is going to slow down too much, could dip into a recession. So I think that they really want to see real interest rates lower, and that is actually going to help gold. Where we are right now in terms of our investments in the bond market, we've taken a little more duration, as I said, but we've done it in the tips market. And otherwise, we're okay saying shorter duration. We'll take that 5.5% yield. And we're happy with that because we're quite uncertain about what could happen in the long end of the Treasury market at this point.
Fritz, you mentioned some of the volatility, some of the intraday price activity we've seen in reaction to the yen carry trade. We've also had a very data-dependent environment, and we've seen some movement in reaction to some of the numbers as of recent. How closely are you watching PPI here, headed our way in just about 5 minutes, and how big of a market catalyst you think this one's going to be, or CPI for that matter, tomorrow?
So these numbers are very important now. I mean, everybody is focused on that. And I think the Fed is desperately hoping that these numbers are going to back up their decision, which kind of sounds like it's in the, it's baked in the cake now that they want to cut interest rates. So it's really important that these PPI and the CPI numbers at least do no harm, if you will, to the Fed's plans to cut interest rates in September. So people will be looking at both of those numbers very carefully in here as we head into Jackson Hole, and then we'll all focus on what Fed Chair Powell is going to say.
Clearly, they want to bring inflation down, right? They ultimately want to bring rates down as well to kind of dampen or buffer that bottom here. Fritz, are they? There's some debate, right? The jury's still out in terms of whether we're getting that progress or not.
Yeah, I mean, again, I think the debate has been for a while and continues to be. The easy portion of bringing rates down is over. And can you get from 2.5? Are you gonna have to just be happy with 2.5 to 3%?
Yeah.
And I think one thing that could happen is the Fed will say, okay, we're going to still talk that 2% is where we want to be, but we're kind of okay in around 2.5 and 3, and so we're still going to start to cut rates in September. I think that's entirely possible.
It reminds me of about a year or so ago, I used to describe it as it was like I would come home after school and my brother would have been listening to, I think it was HPK all the way on the left side of the dial. So I would spin that radio dial and it would just go sliding across. And that was like when the Fed was, raising rates ultimately. Now as they have to kind of fine tune things, we start to cut them ultimately. You start to tune it in a little bit more. And it's important, those last final adjustments ultimately. And they make a big difference, right? To get all the way back to the loop, I think I was listening to at the time, way down on the other end of the dial. So, hey, Fritz, appreciate you joining us here. A solid look at gold, the recent record settlement highs that we've seen, and this trajectory, this trend that continues to reward the bulls to the upside here. Fritz Folts joining us, Chief Investment Strategist at 3 Edge Asset Management.